Everyone asks me the same question, like, oh, how do I know I'm financially ready to buy a home? And you know what? The truth is, it's not about having money in the bank, really. There are key things that lenders look for, and understanding them ahead of time can help you save a lot of stress, okay, when it is time to buy. Hi, everyone. I am Gabby Gilbert. I'm a real estate agent here in New York, and I cover Queens, Long Island, Brooklyn. Listen, I go where the people go. Okay, I go where I gotta be. But even outside of New York, I still have a lot of referral partners. So if you ever need anything real estate wise, you can always reach out to your girl. I do work with a lot of first time buyers, and something that they ask me is like, how do I know if I'm really ready to buy a house? So today I'm going to walk you through a few things that I tell my clients to look for before we start our search. First, it's the credit score. You got to know the credit score, baby, okay? Because your credit score is a reflection of your financial history. And if you are responsible, there are many loans who will work with a credit score as low as 620. And of course, higher. The higher your score, the better your loan options and interest rate. Make sure you're checking your FICO 5 score because that is actually the mortgage score. And I had a client one time who, when they signed in just to check their standard score, it was a lot higher than their actual FICO 5 score. And we learned that the hard way after getting denied for a co-op. But I made sure he got it fixed and we actually got that approval. But that was something that taught me that you have to look at the FICO 5 score. So don't forget. But keep in mind, your score doesn't have to be perfect, and there are credit repair options as well. The second thing that buyers typically worry about is the down payment. Now, it is the largest cost that a buyer takes on because it literally varies, but it's typically larger than the closing costs, appraisals, inspections, anything else you're going to cover. Now, there's a big myth that you need 20% down, and that just isn't true. The more you put down, the better it is for you because you're not paying PMI, which is this insurance that banks put on when you're taking out a loan, if you put less than 20% down. Okay? That's the benefit of putting more than 20%. However, it doesn't mean you have to put 20. You can put as low as 3%, 5% with conventional loans. But in New York, I'm telling you right now that those down payments are not as competitive as what's out there. Okay? It's the wild, wild west out there. So please try to put as much as you can, try to save as much as you can so that you can help yourself and actually put more down. And it also depends on what you're purchasing. Because if you're purchasing a co-op, even though the purchase price is a lot lower than what a single family or a condo would cost, the down payment required is actually a lot higher. It's typically 20% or 25%. With a condo, it's usually 10%. Some condos even accept 5% down. But again, the more you put down, the better for you, the more equity you have in your home off bat, off the rip. And people are messaging me and emailing me and calling me. So you're going to hear the vibrations and all that stuff. But I can't avoid it right now. Okay. I can't avoid it. Forget it. I'm not editing this. Then there are closing costs. This is the second largest amount that you're going to be paying as a buyer. So your closing costs in New York typically range between 2 to 6%. So if you think of it as like 5% I need to have saved aside from my down payment, aside from any reserves, I'm going to need this to close out. That's your best bet. Now, in certain markets, like when it's a buyer's market, there are things called seller's concessions in which a seller would be willing to put something towards your closing costs. But in New York at the present moment, it ain't that type of market out here at all. So make sure that you factor in at least 5% to cover your closing costs so that you don't have to worry about that. Then you want to think about your monthly comfort zone because you want those monthly payments to be completely affordable and so you're not stretched thin because I don't like living like that. And I'm sure you wouldn't like living like that either. You want to make sure that you can afford your bills and other things and just to have fun along with paying your mortgage. So just because you were pre-approved for a certain amount, it doesn't mean you have to utilize the entire amount. So say you got a pre-approval for $1 million. You might just want to purchase a home for 700,000 and you do that because your monthly payment is manageable at 700,000. But just keep in mind, you do not get that extra 300,000 to do anything with unless you are purchasing with a renovation loan or a 203K loan. In that case, if you get $1 million pre-approval and you find a house for 700,000, you can use the remainder, there's stipulations and other stuff, but fine print, blah, 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 and you can use the remainder to be able to renovate the house. But at the end of the day, lenders want stability. They want to see that you have been at the same job for a little while. They want to know that you have steady income. That's what's important to them. New jobs and quitting your job and all of that stuff, that does not show them stability, and they don't feel comfortable because you seem like such a flight risk. So don't panic. Don't get crazy about it. If you are just not sure if you're ready, please reach out. Talk to your agent, me, and let's just have a conversation and see if it's something that you're ready to pursue. Buying a home is one of the biggest financial decisions that people ever make. Okay. And all you really need is the right guidance because it can be so rewarding. So feel free to subscribe, like, share, get in my DMs, send me a message, email, carrier pigeon. Okay. Whatever you have to do, let's have a conversation and let me help you through this process. Click follow and like for more.